again, I'm here to talk to you a little bit about, I want to touch on the healthcare reform. You know that open enrollment is now closed for Covered California and the Affordable Care Act. However, there's lots of things that are triggers for what they call special enrollment periods. For example, if you get married, or if you have a child, you go through a divorce, if there's a death, if you lose your job, you move out of the area. There's many reasons that could actually allow a person to qualify for what they call a special enrollment period, meaning that you could actually enroll into a new plan at that time. So if you know somebody who's thinking, I don't have insurance and I didn't do anything yet, it may be that there may be a special enrollment period that would apply to them, possibly. And if not, we also offer a different type of health insurance. You still have to qualify. They ask minimal health questions, but you can purchase health insurance, temporary they call it, and you would still be subject to the penalty through the Obamacare or Affordable Care Act because it's not considered what they call compliant. It doesn't cover all the things that the new plans are covering. They have different limitations, different deductibles, and more like what we're used to versus the new coverage. So our doors are still open for business even though the open enrollment has changed or it's closed. And keep in mind, if you want to make a change and you're in one of the plans today and you don't have one of these life-changing events, you really cannot change until open enrollment starts again October 15th through the December 7th, and then the new coverage would start January 1. So it's kind of like, we don't have the freedoms that we used to have to be able to switch or cancel whenever we want. Now, of course, you can cancel whenever you want, but then you just can't get anything else, or you can go to the temporary policy and be subject to that penalty. The penalty basically states if you do not have insurance for 8 months out of the year, you'll pay a penalty, and that penalty for this year is 1% of your gross income, or $95 a person, depending upon which is higher. What did I say?
Did you say
1%? Yeah, 1%. So if, and for some people, I have clients that are paying the penalty. They said, I don't care, I'm going to pay the penalty. And that's, again, your freedom of choice. You can do that. But it will be imposed on you at April 15th. When you go to file your taxes, you will be seeing that line item on your tax return, and you will be paying that. Either based out of your refund that you thought you were getting, or it'll just be tacked onto what you owe. You will not escape it, okay? So that just, and I'm not going to labor that. I am a Covered California qualified certified agent as well. Somebody said, oh, I didn't know you did Covered California. Yes, of course I do. That's part of what we do. So, and also, again, I do Medicare. A good lead for me is if somebody is aging into Medicare. It's interesting, Medicare also has an open enrollment period, same period of time, which I think is absolutely crazy. Everything's going to overlap all at once, and that would be, again, October 15th through December 7th, and those plans start again January 1. So anybody that you know that is aging into Medicare or is not satisfied with what they already have with Medicare, they're saying, I can't go to my doctor, I can't get the service I want, then they should call me and we'll explore what their options are if they want to make a change. So, because there's lots of options in Medicare. Now, let's get to what I really want to talk about today, and that is the life insurance. Life insurance is basically, it's how, I love this quote in here. If you open up your little book here, at the bottom of page 5, it says, life insurance is the most amazing product in the world. It creates wealth by the stroke of a pen where there once was none. And that's really true. Where can you spend $50 a month and get a $500,000 return on that, tax-free? So if you are thinking, I don't have any life insurance, or life insurance is too expensive, or I don't need life insurance, you really do need life insurance. It protects your family, and especially if you pull out this paper that I gave you, I realize yours is in black and white, just take a look at this with me. This says that, it says you may be at higher risk for a serious illness than you think. And these are just statistics. And it says 91% of elderly citizens have at least one chronic condition. 73% have at least two Okay, what is a chronic condition? It's something that never goes away. You know, it can be lots of illnesses, but you know, it's a daily care that is required. That's a chronic condition, okay? And then if you look below that, it says 34 seconds, every 34 seconds an American suffers a coronary event. So that's something heart-related. Every 40 seconds an American has a stroke. Every 68 seconds someone develops Alzheimer's. It says 75% of heart attack victims survive at least 3 years. Well, if you have a heart attack and now you are not well and you have to go through rehabilitation, and especially for people like you that are self-employed where nobody else is going to pay your bills, pay your employees, pay your mortgage, what's going to happen if you have a heart attack and you can't work? Is that going to affect your business? I think it will affect your business and your ability to survive. And so we strongly, and I mean strongly, recommend that if you haven't had your life insurance reviewed, you should have it reviewed. If you have an old term policy that's just, you know, term life insurance, those are really what I call a dinosaur in the industry. You really need to have it looked at, reviewed, because there's products that we offer for pennies on the dollar, literally, that offer what they call living benefits. And what is a living benefit? A living benefit is something where if you had a stroke or a heart attack or Alzheimer's or Lou Gehrig's or paralysis or blindness, cancer, all of these types of illnesses, you can actually access the funds in the life insurance policy. They call them living benefits. Living benefits, to me, is what is consumer friendly. And it's really where the rubber meets the road in life insurance, because they say statistically, if you have a term policy, they will only pay out about 3% of those claims, and maybe even 1%. That's the new statistic I've heard. That means every dollar that you spend in life insurance, you're not going to get that money back unless you're one of the 3%, right? Because you're either going to outlive it and it'll cancel because it's a term insurance, meaning term means if you buy a policy for 10 years, it's only good for 10 years, or 20 or 30 and so on. So, but this policy, they say 66% of people will use it because it has living benefits. Living benefits are things that if I have a heart attack, I now can access the money to my life insurance policy. And I may get a $50,000 payout, a $500,000 payout, depending upon how much insurance you purchase. So, do you think that's a better deal for paying maybe a couple pennies more for the insurance? Sounds like a really good deal, doesn't it? Because if you have the opportunity, all of you are going to die someday, you know.
What?
And that's the hard reality. We're all going to die. And do we want to make sure that our families are taken care of? Is that important to you? And it should be, especially if you're a man. There's no excuse. I'm a woman standing up here, and we have lots of life insurance. So I know if something happens to Ron, my family's going to be provided for because he's being responsible. There are a lot of men out there that are not responsible. They're irresponsible and they're saying, I'm not going to provide that for my family. And it's foolish, and you need to make sure your family is protected. You need to and you don't have to buy a lot, but you should have some. You should make sure you have your family protected. So, very important. You look at this little diagram. I gave you these because I want you to sit down sometime and go through an inventory. And this is just, it's not a lengthy one. It's just something you can kind of put together pretty quickly. But, you know, are you going to be, out of the pie of 100, which one are you going to be here? It says 56 people will have incomes between 10 and 50,000. Do you want to live on that? Is that what you want to live on? Because that's the majority. Okay, 16 of us are going to be dead. That's if you're 65. 15 of us are going to make over 50,000 a year. That's where I want to be, is over 50 for sure. And then 13 people are going to have under $10,000 a year to live on. That's poverty level. I don't want to be one of those people. But what I can say to you is, even if you haven't planned well for retirement and you want to be responsible, you can actually plan well for your spouse by having life insurance. You can actually help them and give them a better life if something happens to you. So think about that. Think about your children. If you go to the very back page, you're going to see where there's a needs analysis here. Final expenses are, what is it going to cost to bury me should I die? And they say about $15,000 is what the going rate is now. So we need to take that into consideration. What do you have as far as debt service? Any credit card loans? Any other debt service that you would consider loans that would need to be paid? They recommend an emergency fund for 3 to 6 months of cash monies in case something does happen to you. When you have a heart attack or you're told you have cancer, it throws your world in a tailspin. And what a great thing, when I have a client call me and said, I've just been diagnosed with cancer, and I say, I'm sorry, but you know what? The good news is you can have access to money. You don't have to worry about paying your bills, your mortgage, putting food on the table. And you know what I always, you know what you hear on the other end of the line? Thank God. Thank God. They can breathe. Because you're always worried about, how am I going to get the care? How am I going to pay for the care? How am I going to live? What's this going to do to my finances? Is this going to destroy me financially? And for a lot of people, you know, 75% of bankruptcies, people that have health insurance, they file bankruptcy because of health-related issues. 75%, they have health insurance, but they can't pay their bills. It's shocking to me. And so this is the solution. And it's really affordable. As you age, of course, it gets more expensive. But is it worth it? It can actually create wealth in your family to the point where, you know, your family could survive. And remember, people are living longer. What is the age of life expectancy today? About 82 years old. They used to say we were only going to live till about 68, so they didn't worry as much. We only had about 2 or 3 years after retirement. Now it's 82. So, and for Don Deering, it's going to be 95 probably, right? Because you have longevity in your family. So I hope you planned well, Don. Okay, so look at these in education. That's really important if you are going to help your grandkids or your kids. And I think they're dinging me, but I was told I had a few extra minutes.
No,
or
I found a speaker.
Oh, you found a speaker. Okay, great. So is my time up?
It is.
It is up. Okay. So with all that being said, I could have said even more, but please do one of these planners and call me. And you're not obligated to purchase anything from me, but I would be more than happy to review what you have to see if what you have is adequate, and consider strongly about getting into one of these new policies because they are really going to help your families. Okay, so thank you for the time. I appreciate it, and I'm here to serve you. Bye.